we're back with Push Button Trading, Ask Me Anything, AMA, Ask Me Anything. And today, Tracy, we're focused on capital protection and drawdown related questions. So if you're ready, I'm going to go ahead and jump into our first question.
I'm ready.
All right. So Mike said, he asked, I want something more reliable than manual trading, but at the same time, I don't want to lose a PA or a performance account. Thoughts?
This question to me is almost the same as saying, you know what, I have some money. I want to trade in the stock market, but I don't want to lose it. The reality is that if you are going to trade in the stock market or in the futures market or in any market at all, there is a risk associated with it. And you have to be able to assume that risk in order to do it. If you're not prepared to lose it, then you shouldn't be doing it. And that is no different for a PA account. Mm-hmm. Ask yourself, if you were trading a $50K account versus a $2,500 account, would you trade them differently? And every single time I ask that question, they all say, I would trade them differently, obviously. Well, when you get a funded account, let's say a $50K account, let's say that it's got a $2,500 drawdown, you think and you trade the $50K account like you're trading a $50K account. But the reality is you really only have a $2,500 account, because the minute you lose that $2,500, the account's dead. So should you be trading it like you have a $50K account, or should you be trading it like you have a $2,500 account?
$2,500, yeah.
There's two different thoughts there. If you're willing to sacrifice the account, then you can be more risky and trade it like you have a $50K account. But you have to be able to sacrifice the account. If you don't want to sacrifice the account, then you should be trading it like you have a $2,500 account, not the other way around. That's my take on it. So if you want to, if you don't want to lose your account, then you should be playing with a very conservative risk, very low risk, taking it slow, not over trading, and taking your time. But just remember that the rewards are going to take a very long time to get to. That's it. Yeah.
Yep. Yeah, and it's interesting, these types of questions, because obviously I feel like some people think, oh, I'm going to pay for a piece of software and it's going to be an ATM machine and I'll be able to pull out whatever I want whenever I want. And this is not an ATM machine, right? These aren't put in your card and out comes as much money as you want. These are strategies that have worked well over time, but in any one little sliver of a week or a month may not work in a little chunk of time. And all the reviews that we've gotten, Tracy, on Trustpilot are all, all the amazing reviews have to do with, I'm learning a lot and it's working well. But every once in a while we'll get one who said it didn't work in a 1 month season or a week or a month or 2 months or whatever. Those are the only kind of negative reviews we've ever gotten. And again, that's kind of what we're saying is you have to have consistency over time. People want to turn it on and hey, it should automatically start making money every day. And we do get the question, hey, can I watch your bot trade? And it's like, we have 8 bots. We got almost 300 or 300 plus pre-configured settings. And then there's combinations of them. So there's hundreds of trillions of possible combinations. Same thing when someone's like, let me see your account statements. There's like thousands. And as you know, when you take money out, your account balance goes down. Whereas if you're looking at a line chart, it could appear that you're losing money when you're actually pulling money out. Yep. Okay, next one. Ryan says, I spent a lot on these Apex accounts and half of them have failed 50% of the time and the PA accounts got blown.
I feel like a lot of times these individuals, they focus on, I get PA and then they're rushing. They're rushing even to trade their PA account. And they haven't even proven the process that they're doing. And it's like, first of all, 50%, that's actually not too bad. If you look at some of the averages for manual trading for the funded account program, I think some of the numbers that have been thrown around that I've heard have been that, 27% pass rate is actually one of the better pass rates for manual traders with the funded account program. I can't verify that stat. I think I heard it somewhere. And then you look at the amount of money that it would have cost you to learn the lessons and to develop your trading strategies and to develop your process and learn. If you're trading with real money that didn't have a drawdown, how much different that would have been, because you wouldn't have necessarily blown the account, but you would have lost all your money doing it. So
Right.
it's there. But as far as I'm concerned, if you're having a fail rate and you're not comfortable with the pass rate of 50%, and you've got some accounts that have been PAs, you shouldn't be trading them yet until you're comfortable with the process.
Right.
That's the reality of it for me anyway. So
Right.
you don't want to blow that PA account. Stop trading it until you actually have a nailed down process that you're comfortable with and you understand the risks associated with it. And that is part of how long does it take you to get funded? Like how many days does it take to actually pass? And then what is your actual pass rate? Those are two very important key metrics that you should understand, know, and be comfortable with before you start trading your PA accounts.
Right. And Tracy, we have a tool that helps identify those numbers when you're building a bot portfolio.
Yep, we do.
Yep. So I would say that 50% of the time is not bad. I think that average is 10% or less, maybe 5% or less. And a lot of these funded accounts, their whole business model is you failing. So, that is what it is. Now, the trade-off would be a small monthly fee versus losing, I'd rather pay $23 or $27 a month versus actually losing like $2,500 or $2,000, depending on which account program you're with. I'd rather spend that versus losing $2,000 of my real money. It's a no-brainer. Right? It's so much easier to use these practice accounts. But some people look at these practice accounts as like, this is all I'll ever have. And you have to look past that. These are the training wheels. This is not, the end all be all, like you say, Tracy. This isn't that. This is the training wheels. This is where you go to learn. And if you can learn, improve, make better decisions, and go forward, like it's just gonna be a matter of time, right? So next question is actually a reasonable question. Lauren says, how much capital do I need to start trading with your bots? So good question.
So first of all, if you're trading with the funded account program, then it's going to depend on what platform you use, because all of them are different. Some are more money than others. But on average, I would say that if you were budgeting for about $150 to $200 a month in funded accounts, that's a good number to start with. So it's not necessarily having a specific amount of capital that you would need, but I would certainly say that having the ability to replenish that kind of an income on a monthly basis, where it doesn't hurt you, would be good. I'd almost say that, if you're part of our program, then you'd want to include technology prices and things like that. So I'd almost jump that up to,
Right.
Maybe $400, $500 a month that I would max out. And be able to replenish that with all the funded account fees. And I'm talking about, when you start scaling and you're getting multiple ones and you're not getting sales on some of these accounts. So that's a good budget, I think, to be able to start with. If you can easily replenish, between $300 and $500 a month, then I think you're in a good place. Now, if you wanted to start trading this and transition into real money trading, where you're trading your own money and you're not relying on a funded account program, then I would say that, first of all, hopefully you have consistency already, because
Right.
I wouldn't encourage you to do this otherwise. I would encourage you to do the other way, get that consistency. But I would say probably between $3,000 and $5,000 is a really good place to start for futures trading if you were going to do that. You can do it with less.
I'd say also that when you're using funded accounts, the capital required up front is significantly lower, right? So like in the old days, if you're trading stocks, you had to have a pattern day trade account, which is $25,000 minimum. And the moment you lose $1, you're now below that minimum. It used to be that you need 25,000 plus. Now, using funded accounts, trading futures, that number is significantly, even like Tracy said, as low as $1,000 or $1,500. But we only recommend you use real money brokerage, like Ninja Traders brokerage, for trading futures. We only recommend that as like a step 2 or 3. Once you've kind of got a pretty good practice and you got your training wheels off, so to speak, when you're using the funded accounts, the evaluation, the PA accounts. Once you've got some consistency there, then you can kind of transition and kind of wean yourself off of the funded account programs and using your own money. And so you won't be denied payouts when you do that. And we've had, I don't know how many students, Tracy, but we've had quite a few students who have made that transition. And, it was like one of the best decisions they made, because they got frustrated that Sometimes they'll randomly deny a payout for some random reason that doesn't make sense, right? Again,
Yeah.
these funding
Yeah.
account programs, their whole business model is you losing. Yep.
Yeah. The other issue is that when you're trading your own money, you're usually using a real live data account, not a simulated data
Right.
account, and that has more stability to it as well. So,
Yep.
again, when you're trading with the funded account, if your expectation and your priorities are to learn, develop process, develop confidence, and all that, you're coming at it from the right perspective. And that's going to set you up for some success later. The idea isn't to make this your full time living. The idea is to get yourself into a position where you could turn trading into a full time living. And
Right.
if you need to rely on the funded account program for a little bit so that you can maybe build a trading account or whatever, then so
Sure.
be it.
That's
But
fine. Yep.
ideally, it is to transition and get yourself into that full freedom where you have that full autonomy to do what you want. And like I know that the funded account, a lot of them lately, there's been a freeze on trading gold
Metals.
as an
Yep.
example, where my personal account is not frozen. I can continue to trade gold because
Right.
the market's not closed. It's just there's a limitation that's been imposed on it by another company that is preventing the funded accounts from being able to trade on it. But I'm
Right.
able
You
to
can
continue
continue.
trading.
Yep.
So
So
it levels the
GC,
playing field.
gold, or
Yeah.
MGC, the micros, yep, still
Yeah.
up and running, available to trade,
Exactly.
just not
Yeah.
in a funded account at this moment, right? In
If
mid-February,
if I can't trade it in my real money account, nobody can trade it.
right? It's
That's
like a
right. So
systematic
yeah,
problem, not a single company's decided you can't trade it. Yeah,
exactly.
yeah,
Yeah.
awesome. So our last question comes from Jake, and I think I understand what he's asking. I think he's inferring if you're in a losing trade, can you just remove the stop loss? Can I just turn the brakes off if I don't want to slow down?
Yeah, I mean, you can, but there's always a bottom. That's the
And you may
fact.
be a long way away from the
Yeah.
bottom.
So in your own personal account, that bottom is going to zero, and even
Zero. Yeah.
that could be less, could be more because
Yeah.
with leveraged securities like futures, you can owe more than you actually have in your account, which means
Right.
that at
Paying
the end of the
commissions
day,
and yeah.
yeah, here's the margin call. Put the money in your account because you owe us money. It is possible for you to lose more than you have in there, so that's not a good thing. The second thing, if you're trading in a funded account, that floor is going to be your drawdown. You hit that drawdown, whether it be a daily drawdown, whether it be an actual like a full breach drawdown, whatever it might be. Yeah, you could take the stop away, but at some point you could hit that bottom. On top of it, there's also consistency rules that play in, and that consistency rule for the funded account program goes to how much profit you can make and how much loss you can consistently get. So it plays on both sides of it. It's not like, whenever you win, that's as far as it goes. They also look at how far that trade went against you, and that plays into a consistency rule as well. So
Right.
yeah,
Yeah, and it's interesting because like I always look at stop loss. They're the brakes on your Ferrari, and there's some points, some periods we don't need it, and everything's going great. But at some point, you come up, you approach a very sharp turn, and you have to slow down. You have to protect the account and just take a loss. And a lot of people are like, oh, if I just didn't have stop loss, I'd be so much more profitable. But that's it's not a like a long term strategy. You might get lucky from time to time, but again, like the main point we want to reiterate, this is consistency over time. You can't look at any one trade and build an entire set of rules off of a single trade or even two trades. What we like to do is look at thousands of trades and make decisions that can have, can last more than 1 or 2 months, right, or 1 or 2 weeks. Something can have some staying power, and being able to, have that consistency over time is very, very important. So
absolutely. Yeah,
cool.
good questions.
Yeah, thanks for hanging out with us, guys. We will be back soon with some more questions.